Huge trading volumes. That's what we just saw last week when it came to the quad witching event. Now we have massive dark pool transactions. Hello, ladies and gentlemen, and welcome back to the Daily Show where we discuss markets around the world. This week's focus comes back to the Fed. The policy meeting is happening, and of course, this means we need to have a look at the most important levels for the S&P 500. Don't worry, we'll cover all of those together in today's show, but take a look at that massive volume and big sell-off. What does the data suggest happens for the rest of September? With the largest stock in the world facing some serious selling pressure, and of course US oil still pushing towards $92 a barrel, what do we look at next? Well, welcome back everyone to the special weekend edition of the show where we discuss stocks, commodities, and cryptos together. If you like any of those markets, remember to subscribe, smash that like button if you find value in today's video, and there's a lot to discuss. We've got a great show coming up. Let's begin by the sectors that did well, utilities, and the ones that didn't do well, technology and semiconductors. Here's the Friday, but if we take it over to the weekly, you'll notice that there were some gains through those sessions. But again, utilities and another sector we'll talk about later on today did very, very well. What about the bullish percent index? Are we seeing signs of recovery underneath the hood? The answer is, I guess at this point, no, we're not. But at the same time, we're looking for these style of candles. And of course, we're also looking for whether we're going to get capitulation in possibly the worst period of time for markets, which tends to be the back end of September. More on that coming up soon. Let's talk about percentage of large cap stocks above and below certain moving averages. I love this chart. I shared it over on our Twitter or X account. Look in the links in the description down below. Make sure you follow us there. And there's some amazing charts we put in that one today. But let's take a look at this. S&P 500, the percentage of stocks above in energy sector, 87%, but that's dropped off in recent days. And as we've been talking about, we feel like there's a bit of a changing of the guard here on those stocks. But look at utilities coming out of nowhere, really performing very well, but still super below 200-day moving average. One of the worst sectors is this rotation. Well, there's so much to go through on this chart. We'll bring it up a few times this week and go through it. But let's move over to flows because I think this is where things are getting really interesting. First up, long-term growth. What is the expectation of most of the experts out there? Well, everyone seems on board the communication services and industrials. These are the two that I'm seeing across the board being shared in almost all reports. Everybody's on that one. They love that. And they're actually really not liking materials. And that's funny because recently we've really liked materials. Today they're going to cop it a little bit, but we've liked iron ore. We've liked copper. They've been stagnating for a little bit and then they found super strength over the last month and a half. That's pretty normal, but it doesn't tend to last forever. And we're actually now starting to enter into a weakness period for them. So again, that will be very much on China's flow. Speaking of flows, we just had one of the biggest things happen for a while. Net equity inflows for funds hit a massive high. In fact, we haven't seen a period like this since March of 2022. Now, during that period, we know what happened. We saw a rally in March into a massive sell-off. So it doesn't necessarily mean it's all over for the sellers, but certainly some big inflows, and we'll be looking at whether there's some consistent inflows over the next couple of weeks. Here's another report that we need to discuss, the data for the back of September. So we know that the Friday was down. That is actually perfect because, of course, we knew that that was over 90% statistical probability based on the last kind of 11 years of data. So now it is 11 of 12 of the last couple of years have been basically down. So quite a while. Let's move over here to what happens the percentage the week after. So this is where the week gets very interesting. Generally speaking, this is the worst week of September, which a bad stat together with it, which is basically showing you that over the last period of time, we tend to sell off. In fact, when we've looked at this and we can kind of look at it from all of the market indices, you can see we've got that nice little rally. Obviously, that dropped then on the Friday, and we tend to go into this weakness period through the last trading days of the month. And of course, that leads us to a 1733 over the last 50 years. So 17 up, 33 down. Of course, if the data is showing you that it's going down and the price action is saying it's going up, I'd still go with the price action every time. But if the data is going down and the price action is going down, might make you feel a little bit more comfortable in what you're seeing. Let's go through some unusual options and trade activity now. So Apple, a big one. Huge, big trades across the board here. A buy, no doubt, because it went up. A sell, no doubt, because it was at the high. And we talked about this level, very, very key. And now we're at what we would call the big demand zone. If the market is managing to fall to a new low here, which we all need to have alerts on, we'll check those out soon, then we know that the largest stock in the world is starting to face significant weakness. We have to expect to sell pretty much across the S&P 500, NASDAQ, and many other market indices. Let's have a look now at some flurries of trades that came through. And I think it would be no surprise that we had tons of dark pool trades and they were all late on the print. So basically what that meant is we weren't able to see them until it was too late. However, we had our suspicions that Friday would be weak, and there were tons of sellers straight under when we went through a very key level that we already talked about, which was, of course, the demand or the support line of Friday. Once we broke that level, there were transactions going on everywhere. They led to pretty big sell-off flow, and of course, that's what we saw represented on the charts. The same thing happened with a few other trades. We had, of course, this bear short that we knew was most likely a short last week. They just covered, so it looks like they took profit. And we have to kind of pay attention to this because although there were tons of transactions going on Friday, they all led into quick sell-offs. Then at the end of the day, we saw these transactions coming through, and you have to kind of feel like they could be by the dip style reflexes by the market. The market basically bought the straight lows here on the Qs, and we have to assume they're a buy. They could be a sell, but we'll look at the price action later and we'll kind of analyze this together. But yeah, it was coming through. This is one of the largest trades since July 31 this year. So a huge trade going through the Qs, big, big, big. And of course, it wasn't just there that we saw large trades. We saw big trades in the oil and gas funds, the ETFs. We've already been kind of talking about this a few times. We believe that energy stocks are being kind of sold off at this stage, although most people won't really see that. There are some large transactions going on. And then we have some interesting ones. Netflix giving up huge gains after coming out and saying they're not really, I don't even know what they were saying they're not going to chase growth or something, who knows. But basically there was a bunch of short covers, I would say, back down to the lows and then a large transaction. Kind of smells like somebody's covering some of their positions. Walmart also had some incredible transactions going on, and this is in line with recent sell-offs of big, big stakeholders. Now, I'm not sure if this is a sign of the times, but massive trades going on in Walmart, and it's just huge money. And of course, it's from the biggest players. So take that what you will. I'd say it's a little bit cash out liquidity, but I'm not sure if it means that much moving forward. Let's now move over to the options world. And of course, it was a frenetic Friday, being quad witching. Everything was doing more than normal volumes. And the interesting ones, I guess, that were coming through were still huge trades on Nvidia, Tesla, and then we also had some big ones going through Apple, Amazon, Meta, etc. What I want to focus on, though, is some others. So if you have a look here, we had things like Block suddenly coming out, Square 1.5. We had an Adobe trade 4.52 times average, and you can see very equal call and put volumes. We'll be watching that quite closely this week. And then we had some new ones come back into the charts. Enphase Energy coming out of nowhere, only at 0.9, but still coming back into the trade there, and Broadcom also finding some big trades, and Moderna. So there's a lot of the favorite stocks that we've been talking about recently, some that have been sold off aggressively, some that we believe could continue to go sell off, and there were large transactions. It was a 43 million day versus a standard 40 million. So again, quadruple witching bought the big event. Which was the best sector? Well, it turned out it was GDX, and we've been discussing how gold stocks are underneath spot. So even if spot went down, which I kind of suspect it may, then we thought gold would do well. It turns out, though, Friday bought the bulls on spot as well, and that was to a very critical level. So GDX is doing really well, 2.1% up on the session. But notice this, we've got utilities just behind it. And then, of course, we still have healthcare and staples, two of the big defensive sectors. They were in the kind of rallies, or at least the holding their own in comparison to the rest. Semiconductors, solar, technology, consumer discretionary, all of those Chi Gamma style stocks as well, they were all down for the session, which brings us to a 5-day rolling average of pretty much the worst stocks in the market being the ones that most people have been in for a while, which is semiconductors and technology, and the best sectors being that metals, nice, GDX, very nice. Surprised how well that's been doing, actually. And then utilities also, which is a very defensive style sector coming out of nowhere. So let's go into the charts together and look at a few things we need to be watching. Number one, if you're a recession hunter, let's say you're looking for a US recession. Remember, it tends never to happen until everyone doesn't expect it. When do people not expect it the most? When we uninvert yields. So what's your US 3-month versus US 10Y? This is the code here. And your US 2-year versus the 10-year. Both of those will be important to have on the charts. But also, have a look at this, guys. Wow, US 2-year, 5.3%. Whew. I'm going to say this right now. My alerts were going crazy this morning. That is a huge, big bust through on the yields, yet the markets are up in pre-market here. So this is a very interesting breakout. This is now into the unknown. And we've speculated for a while here that this could bring the bears. So it's a big bust here of the US 2-year. We'll put it over on our Twitter or X account. And the US 10-year was not far behind it. So some large moves coming into this week's Fed statements. Now, this is super important to watch. Whatever happens here, if this starts rising up again, and we see yield curves in particular, which we'll be following. If you're not sure what yield curving is and you need to see that, we'll visualize it this week and look at it together. But this is going to be some important charting. These are fear of the unknown coming in. So I think this is going to be a big Fed week. TLT also probably not expected to do very well off this, you would think. So basically, we're going to be looking at treasuries maybe going down into that 88.90, which we've been warning about for a while. There's huge transactions, huge flow. I've been looking at flow and it's going bonkers at this stage into treasuries. And you can see volume is elevated for sure. But at the same time, I wouldn't be surprised for a flush to occur before we end up going to a resumed bull trend. If you ask me what I think of treasuries long term, I'm a pretty big fan. But short term, I'm still a bit skeptical. Dow Jones Transportation Average Index actually did better than you would think over the Friday, so it held its own, no new low here. We will be watching that for further weakness. The volatility of the volatility did increase a little bit, but what was interesting here is we saw the VIX bounce off that 12 level into the 12s, and it's back to 13.8. So maybe mark out a new high, like a 14.42 this week. Put that on your chart, set an alert, just to see when the VIX is spiking through if it does occur. Now, what else have we got? Well, the weakness does continue through the 20 moving average. And of course, some alerts here for bulls. Set an alert up here. That's going to be a very bullish sign in my opinion. And of course, for bears, you're looking for stocks to resume their downward trend, go back under. This is 41.4% of stocks are above their 20-day moving average, but only 33.12% of stocks are above their 50-day moving average. And of course, the 200-day moving average is still showing us that we have not got a robust recovery that happened through the previous months. So it was getting a better, and then August just really smashed around the market quite a lot. And although it's been hovering to down, at the same time, take a look at this. The percentage of stocks above the 200, not so good, certainly showing us that it's not a super robust market. We'll talk more about that this week. There's so much to cover on this channel. What about the Home Builders Association or the Home Builders ETF? In this case, we have a pretty interesting move. We don't quite get underneath the 20 moving average, but we will be watching it. 77.14, a great alert place to show us weaknesses coming into the markets, and home builders can lead us into weakness. So remember, that's an important one to have on your charts. Utilities, this is another sector that we need to be watching here. A big, strong bull bust last week in defensive sectors such as utilities. If we then pull back down, I'm pretty bullish on utilities now. Then I like what I see on the charts. And when you look at the weekly, you'll see what I mean. Quite strong action coming off these lows. It's been horrendous for a while, and a decent little move there for those ones. Another bad looking chart is Magma. Big shooting star. We talked about whether the weekly was able to hold above this zone. The answer is no. So is this strong? No, it's not. It's not very good. And if we continue to see follow through towards the negative side, that could be really bad. Of course, 20 moving average is also important. Are we trading Magma? No, we're not trading Magma, but we're using this as a bit of an idea of whether the market is strong or weak. As we mentioned before, iron ore is weakening. There's no doubt that was a relatively bad day for it. But with the explosive growth it's had in recent weeks, thanks to what we're having to assume is China stimulus and China demand in general in the backlogs, people are believing it's there. Then we've seen here a really nice pullout of iron contracts. And again, we're still bullish on materials for now, although that is now changing as we approach the end of September. This is where we tend to go into a bit of weakness for those particular stocks. Let's move over to the US dollar. Nothing much to discuss here, although it's still in a bull trend. It finished a fairly interesting bull week party here. Yeah, there's a real chance it could still go to 105.65 with yields exploding out to new highs, and we will be watching this very, very closely. Gold. Now, I am surprised to see gold still rallying in today's session, considering where yields are. So if yields are at 5.3% on the 2-year and the 10-year keeps going up, I can only say gold is rallying because everyone thinks it's stagflation, okay? And that means the move behind closed doors is a stagflation-based trade. That's when gold does well. Gold hates yield higher, so we have to be watching this very, very closely. It's back to that key resistance, 1930. Remember, there's tons of stop losses behind there. So if we do get a bust with a close above, we're probably moving 1950 plus, I would say, back into the 1960s. Now, what I do really like here is GDX. Look at GDX. Very strong trade here. Back to that secondary alert level. We're looking for that to rally up. For the brave that we're buying in here, congrats to you. Very nicely done. Some people will be breaking even up here. I wouldn't blame you at all. Good levels. It just shows you that sometimes your opinion means nothing. I mean, I actually thought spot would probably sell from this zone with those tweezers. It did for 2-3 days. Then it rallied back up stronger than I thought it would be. But at the same time, GDX was really where we were talking. Of course, we discussed how we thought GDX was much better than gold spot itself. Let's move over to Tesla. Everyone wants to know what's going on here. I'm not sure yet, actually, because the price action is quite strange. I mean, if you were looking at it on the table, you would say, well, this is pretty strong. Okay, it does. It looks pretty strong. Has it gone above this line? Yes. Does that mean that pullback should be met by bull demand? Theoretically, yes, it does. Have we met the last gap? No. So unfortunately with Tesla, it's very difficult to read and hear exactly which direction is wanting. If you are a bull though, I wouldn't be terrified of the sells just yet because there's an expectation that around that 20 moving average, should we pull down the daily, there will be buyers in there based on previous transaction prices. We'll update in the next video on what we're thoughts on Tesla after we see Monday trade. What about the Apple stock? Well, this is a do or die time for the bulls. They must defend this area. Pretty big zone. Obviously, new alert lows. You've got to have your new low alerts. You want to set them in. Make sure you're ready for it. If that does happen, we've got to be going down for the rest of the market, and we'll talk about those levels as they do occur. But at this stage, we've seen a large transaction on the biggest stock in the world. I don't know if it's a sell or a buy yet. If we breach through 180, I think we're probably pretty clear that it is a buy. So we will be watching both sides here very closely for some nice patience, react, don't predict kind of commentary. Let's move over to Amazon. We did see huge transactions. They've led into a bit of a sell-off. No turn for a swing trader yet. Of course, trend is still up. So we'll keep watching Amazon, but some interesting trade there. CQQQ, the Chinese market's back down to its defended level, or at least we theorize it's a defended level. This is a technical, of course, but we don't really have a super strong turn event yet. We're just kind of theorizing there's some kind of policy shift that keeps happening when the markets come down here. So will it be a big one? October expected to be the big announcement for, of course, China, and we'll find out how the market moves. The DAX remains really tough, both buyers and sellers. We are in a chop market, so we're basically in a 1-1-2-2. So we're in a range-bound market at this stage. The overarching is, of course, distribution. If we breach above, we're probably going to press these highs. That is a closure above this kind of 16,000 plus. And of course, if we breach below here, that's a huge sell zone for a bunch of market participants. The ASX 200 finds resistance at the peak. So this is a good level here. Big kind of shooting star that came off that level. If you did rally the ASX last week, congrats. If you broke even or took some profit here, congrats. Pretty cool level. And if it does breach through there at the moment, we need to set alerts for that because this is going to be super key. So I'm going to set an alert right now. We'll just set an alert randomly up here. Of course, you probably should make it a bit better. But if we do take those highs out, that's going to be significant because look at that on a weekly and you'll get an idea of how range bound this market's mean. We're looking for those explosive moves. But I could see weakness following through here, kind of like a rally into weakness. This is a super high now. Stop losses will be sitting behind here. So, of course, we'll be watching that. But yeah, all of a sudden the ASX switches. US 2000, very weird market, floating up and down, continues to hold the 20 moving average, continues to look weak on the charts. And basically the weekly closed is a long leg doji, a high and a low and open and close at the same level. We don't know the direction just yet. We'll be watching very closely. Qs back to the 20, and you're going to see this a lot. Back to the 20 Could be a bounce here. We did see that large trade going through. Let's have a look at the NASDAQ futures, though, to get a bit of an idea. So if we go down to a 2-hour, you'll see there were some large trades that came in right around this level. Why? Well, this is the demand zone. You can see here, previous buying, key level. So certainly a big point here for the NASDAQ. And I'm sure a large component of it as well is a bunch of people pulling things such as fibs from these lows and saying, well, these are 50% fibs in here. We're not quite back down. I would expect something like this to occur as a real possibility for bulls. And if that happens and we go into this demand over here or this order block, then this could be very significant because, of course, a switch in here would be a very bullish sign if it worked like that. We'll be watching for those types of things. We did see one of those play out last week, which obviously led to a very nice little bull trade into the profit target zone. We know where all of the bears sit right up here. We know the defended zones. We now know some big breakout levels as well. So let's move over to the S&P 500. A lot of people are looking at this as an island reversal on the SPY. This is a gap up, gap down, obviously new low formed, which is again kind of bearish here. And the markets could be, of course, poised for sell-offs down to 43.30. If they close underneath 43.30, we know the next level, 4,200, 4,150. For bulls, what do you want? Just above here. This 45.40, we've talked about it so many times, is such a critical level. Look how the market sold that zone. We knew there were trades in here. They sold it into the max Payne concepts of Friday, and they really pushed that market down pretty hard. And now they've put it right back in the demand zone, right back in that 20 moving average, kind of could be acting as dynamic support. I know it looks like it's underneath. Yes, it is. But at the same time, it's give or take here. We're back into demand. So which levels should we be watching this week? Well, you're going to have to mark out your low, of course, which is 44.31. If that gets taken without having an instant rally, then of course we could be moving further down. For bulls, you want a 45.40 plus close. If that happens, probably new highs forming. And yeah, I'm kind of thinking this is a real possibility. A sell-off down to here is a possibility that then goes to 43.30. And then, of course, I think if we hit this demand of 43.30 again, some significant shenanigans are going to go on. And if we bust it, of course, 4,200, 41.50, which is our last really strong bull zone. So with equity flows increasing, that is that we're basically seeing Wall Street probably start buying the dip, to be real. Then while they're buying the dip, it can still keep dipping, but we know that they're starting to get excited about some prices, whatever the hell that might be. We saw inflows increase, and certainly a very interesting point. Remember those breakout zones, some key levels to be looking at the charts, of course, with your own analysis. Let's have a look here at Bitcoin versus the US dollar and, well, the USDT in this case. And we still have that kind of bull buy that was in there. So we saw that drop. That's a good buy. Rallied to a new high. That's cool. But I'd like to see it go back to 27.4 to 27.9. We have not seen that at this stage. So obviously an important level here for Bitcoin moving forward, and we'll be watching it very closely. For anyone that's wondering, max Payne ended up being 452. So I've just put it here as what it sat on the Thursday, so you can see. So our kind of theory was that we would hit 440 to 445, and we of course hit 445 at the close. If we refresh this though, I think we've still got the old data, so let's just make sure we get that through. I just wanted to show you here. So max Payne, in my opinion, was pretty well achieved because, of course, well, we're not going to be able to get the old data anymore. But basically, it showed here as 452. Now, the reason why that was because we ended up getting a massive close of 440 puts and 445 puts. They were obliterated. Somebody just closed them all huge. So massive closures there. That led on to some significant changes in the max Payne, but I still feel like Wall Street really achieved their maximum Payne last week and they got it done. For this week, what we need to be watching is a few things. We do have mostly Wednesday in focus here, which is, of course, the federal funds rate. Will they raise rates out of nowhere? 5.5% current number. Will they give it a 5 point something bigger? We'll find out. And then, of course, the statement. Everyone will be looking at the press conference. Sometimes what will happen is the market will move one way, and then it will move the exact opposite way when the statement and conference comes out. So it's really the 2:30 p.m. you need to be watching. The statement's one thing, the rate is one thing, but it's more what Jerome Powell says. So just remember, it's what he says that tends to move the market a lot more, and everyone will be thinking about every single word he utters, and there's going to be absolute bedlam, I'm sure. There's going to be a ton of volume and a ton of big trade going through. Then we have a whole bunch of other interesting information. We've got the monetary policy statement from the Bank of Japan. This now matters because look at what's going to go on. Are we going to go from negative rates back into positive rates? Some people are speculating that. And then we move over to Friday, which is flash manufacturing PMI and flash services PMI. As always, everybody, thank you so much for watching. If you are interested in attending, of course, our Vegas event, it's almost over now. We're almost there. So definitely check out the virtual attendance, session ticket, or the premium access. And yeah, there's still a couple of tickets left. And of course, virtual attendance, well, you guys can join if you want to. We've got 11 world-class trading experts coming, and there's some great ones there. And I'll be doing a really awesome speech as well, which I've never talked about before to the public. Thank you so much, everybody. Subscribe, smash that like button, and we'll see you next time. Bye for now.